Good evening, dear traders. Let's return into euro against US dollar pair. It was an interesting situation with attempt to break this level 1.16 and 7, and it was false breakdown. So euro against US dollar is currently in a very interesting battle near the upper boundary of its broader range. After a period of pressure and correction, the euro is once again attempting to return toward the 1.18 resistance zone, which has remained a key level for several months. So fundamentally, the picture remains mixed. On the one side, the US dollar still holds an advantage through the interest rate differential 3.75% versus 2.15% for the ECB, which continues to support dollar demand, especially during periods of market caution. But on the other side, the market is gradually shifting back into risk-on environment because rising indexes, S&P 500, Nasdaq, Dow Jones. Pressure on the dollar as a safe haven asset is easing, while the euro receives support from improving sentiment and expectations that the ECB may maintain a relatively hawkish tone amid inflation risks. Technically, the structure still looks like a broad range. The key support remains in the 1.15 and 7, 1.16, while the we see market is once again testing resistance around 1.17 and 8, 1.18. What is important? Sellers are no longer able to push price significantly lower, while the market is gradually forming higher lows. This suggests that bearish pressure is weakening, although there is still no confirmed impulses breakout to the upside. Essentially, the market is now approaching a decision point. Either the euro secures acceptance above 1.18 and opens the way for another bullish impulse, or the range structure remains intact and the market rotates back slower within the range. For now, the setup looks more like an accumulation phase ahead of a potential breakout, but without final confirmation yet.